Hey, it's Mac with PriceActionTradingSystem.com, and this is Monday, February 11th. Today's President's Day, so the markets are closed today, or they traded for a little bit, but it's my opinion that holidays like today are not worth trading. There's just not much movement, and just to show you, to give you an example, this is really pitiful, but this is all that happened today. I mean, this was where the market opened at the Sunday trading, and from Sunday at 4:30 or whatever time the market opens, I forget, till right now, that's all the price action we've got. What is there, 10 or 15 bars there at the most? And generally from one close to the next, the market opens. This is a more normal day. This was Friday. The market opened right here the day previous afternoon. And when it opened at 8:30, it was here. So you see the difference. Still not a lot. Even Friday was kind of low. Here's Thursday. From there to right in here somewhere. And Wednesday from here's the open. And here's 8:30 in here. So you see there's quite a few more bars than there were today. And of course the market's closed now. So it's after 10:30 Central Standard Time. So the market's closed. But so I generally do not recommend. I mean, you can see if you tried to trade that, you could have made some money. But really, if you're starting to trade at 7 a.m., which is really when the market starts to move, you can see from 7 a.m., really right in there, 1, 2, 3, 4, 5 bars. So you'd have to go to a really small chart, and then you don't get enough movement. So it's just not worth trading days like this. So take the day off, enjoy, getting a break from it, and get away from it. That's my philosophy. That's what I do. And so I suggest that, it's smart to do that, and you should consider doing it. But that's not really the point of the video. Since we do have a holiday today, I wanted to talk about support and resistance because so many people struggle with this. And this is really the whole key. You always hear me talk about only taking trades at key entry points. Well, where are key entry points? Key entry points are areas where strong support and resistance form. That's what a key entry point is, and that's the place you want to enter. And I want to show you this, and I want to talk about support and resistance and explain it to you. Notice that this was resistance here. 1510 has been resistance, and notice I've backed out way out, so these are multiple days. But if you're getting on a regular chart, I mean, if I took the time off this chart, you wouldn't know. A daily chart will look just exactly the same. A weekly chart, you'll see the same identical thing. So that doesn't really matter at all. What you're interested in is just finding these areas where prices return over and over and over. And you can see that we found resistance at 1510 once, twice, 3, 4, really 5, 6, 7. You could count that one, 8. And it took 8 tries before we finally got through. But here's the other key. Once you get through an important resistance area, it then becomes support. Or if it doesn't become support, then prices will it'll be a failed break, and prices will usually get back below and start testing it again. But notice what happened. We got through this successfully, and then look, it starts testing these areas. First it was a little higher where the actual breakout was, and notice how we tested that all these times across here. We got through it slightly, and then it found resistance again. And resistance, support and resistance might move a little bit. You might have started out with it right here. We got a little bit above it, and it but that's where you get the most touches, right across there. And you can see where prices have come back to test it a couple of times. And so now it's acting as support. It was previously resistance. It's kind of moved up a little bit there to these highs. It was previously resistance, and now look at it as support all the way across there. We breached it a couple of times, but those are just failed breaks, and those are beautiful long setups. Notice how prices, let me show you this. So now hopefully you understand that. But let me show you one other thing Notice that this is a trend line. All that is an angled support and resistance. You got resistance up here, and notice generally when you find it on one area, you can copy that line, and notice that's an exact replica of that line, and drag it up to the top, and then you find where the resistance is. And you can see we turned 1, 2, 3, 4 times, and then off the bottom, I drew it off. I got this off those first two swings right there. Next time it came back to it, it bounces. Next time it comes back to it, it bounces, and we finally broke it. And we broke it again, and then now look, we're starting to test it from underneath. We might, if it holds, we'll probably turn and start trending down, or we may just stay in this kind of, and if you copy this and drag it up, you'll notice we've got kind of resistance up there now. And so this is acting resistance, and this is acting support, and so we're kind of stuck in a trading range. And so that's what the key to all trading is, understanding where these support and resistance areas are, and understanding how important they are to your trading, but then also understanding that there's angled support and resistance lines that are just as important as these flat horizontal ones, and we call those trend lines. And so that's key. But just remember, you'll test resistance. Notice how many times we found resistance around 510, 511. We finally got through it, and now it's acting as support. And you'll see the same thing on the trend lines. They'll hold and hold and hold till they give. You got a break here, a couple legs up to a new high, and now you're starting to trend down. And notice we tested it. We're testing it from the underneath, and we'll do that enough times till the market will give up and start probing to the lower side. And that's really all that happens in the market. That's the key to the whole thing, is that prices are continually probing important support and resistance areas. And as long as they hold, they're still support or they're still resistance. But once they give way, then they'll go seek out the next level. And that's what happened. We kept testing, we kept probing this resistance area. It finally got through, and now we're up here probing this resistance area, and we'll keep probing it until we either get through or the market fails and it starts going and probing in the opposite direction. And that's the key to everything. So if you understand what's going on, then you understand why finding these trades at these areas and why they fail. Look what happens if, this is where people get short. Here, when they break below these important areas, and they get trapped. And instead of looking to get short there, you need to be getting to look long. Instead of looking to get long here on these breaks out of these areas, you need to be looking to get short. So if you can find these and you understand that you normally fade them or trade in the opposite direction, just like with a trend line, then that helps your trading. But let me show you something else. Look how good the moves are off these areas. Look how strong that trend was to the upside. But as soon as it hit that area, look at that strong sell-off. So this is where you want to be looking to go short. You want to be looking to get short every time the market gets up here. There it is again. There it is again. And look at those trades. Look how good those trades would have been. You could have made really good money. Look at this. This is from 1510 to 1494. That's 20-something points. Look at this. Even if you only got the first leg of this, you would have gotten from about 1511 to 1506. And so, that's 4 or 5 points on just the first leg. But if you held on and kept your stop up here, if you're trying to, get a little more out of it, it went from 1499, say. So, that's 15 points right there off of a single entry. And this one was even better. And then let me show you. Then coming from the lower side, you got to trade here, 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 and here. There's 1, 2, 3, 4, 5 trades. And any one of those trades would have made you money. All you had to do was you could have just bought this blindly. Usually it's best to wait. If I back out a little bit, you can see it. Wait for a setup. Wait for a good trend bar in your direction. There's a great second entry long right there that would have got you long, and you could have ridden this all the way to the high. There's a bounce right there. There's a second entry right there. Now this one would have came back and stopped you out, but you still could have made multiple points right there. Here's another one, a second entry long. You could have ridden this all the way up. So, it's important that you learn to find these spots, and they're what I call key entry points. And once you find them, but let me show you this. Now here's your trend line. Notice that there's your support line. Notice that there's a trade there. There's a trade there. And you always got to remember that even after you get a break, you're usually going to get a retest of the previous extreme. So once we broke this trend line in, we're still looking for longs, and you could have gone long there. And there. And this one, you would have got a couple of points, but then it comes back. As long as you kept your stop down here, which is what we always teach, keep your stop below the signal bar where you entered. And then you had a chance to add on here or start afresh here, take your money here and start over. And you could have ridden this all the way back to the top, and then you want to exit somewhere up here at the top. And then look, it comes and tests it from the low side and reverses down after that. So then you got a nice short right there, and there's 4 or 5 points, easy. So, but also notice what happens when it touches the upper side of the channel. You find where the channel's at. Notice that there was a great entry right there and a great entry right there. Now you're taking a little more chance when you're counter trend trading, but they still tend to work. And so this is why I'm always preaching or talking about key entry points, which are just strong support and resistance, and they can be flat and horizontal like this or angled like this. So learn to find this stuff, learn to trade it and take advantage of it. And just to give you an example, let's just go to a single day. Now this is that multi-line line, and notice how prices are reacting around it every single time on both sides. And that's because it's an important key support and resistance area, and it's going to keep testing it, and just like it does the the flat one, excuse me. So you got to be aware of them. And notice that once we finally had the break and a couple legs up to a new high, now we're starting to trend down. But let me show you something on just a single day. This is just one day. Here's the break. So this is where the market started. And you got a trend line working right down through there. And you could have found it off those first 2 swings there off that high. So when it came back here the next time, guess what? You were sitting here waiting on it. And you're going to go short right there. Always mark my shorts in red just in case anybody's new watching this. And there's a great, and look at that move. That's just in one day, and you should have had that line right off those first couple of swings. And sometimes it will be off the swing highs like that, but it's usually where you get the first couple of touches. But I usually always draw it through the closes until it proves otherwise. And you see, by drawing it through the closes right there, that's exactly where it turned. And look at that move. Now that's you could have entered this around 15.18, and that dropped all the way to 15.11. So there's 7 points on one entry from 103. So in 30 minutes, you could have made 7 points on a single contract. So that's $350 in 30 minutes on a single contract. Where else can you make money like that in 30 minutes? A lot of people think, hey, $350 is not much money, but where can you make $350 in 30 minutes, without sitting in a chair just looking at a screen? It doesn't get any better than that. So if that's another thing I always try to get across to people is this is not get rich quick. People that come into trading looking to get rich quick are going to lose their money. What you should be looking at in trading is coming in and making a salary, and you want to start within your means. If you come in and make $100 a day and you do that consistently every day and you build your account, then you can get to a certain point, then you can go for $200 a day or $300 a day, and you build on that, and you keep building, and once you consistently do that every day, then maybe you're shooting for $500 or $1,000 a day, and you build, and you will eventually get rich, but it's not a get rich quick opportunity. It's like any business. It's like any professional opportunity coming into, let's say you want to be a doctor or a lawyer. It's no different than that. You have to put in a lot of hard work, a lot of study. How much school time does a doctor or a lawyer put in? You got to get your undergraduate degree, then you got to go to medical school, then you got to actually go out and get your residency. It takes years and years, but eventually when you make it, the money starts coming with it. And it's the same thing being a lawyer. You got to get your undergraduate degree, then you got to go through law school, then you got to pass the bar, and then you got to go out and get some real life experience practicing, practicing law. And then after you do it for a while, you get good and you win the big case, and suddenly you're making the money. And trading is exactly the same, and people don't get that. You're going up against the professionals, against the best in the world, and you're not going to just jump into this and do it overnight. You got to put in your years of study, and it maybe take you years. You're definitely not going to do it in a few weeks. It's going to take a year or two to get the feel for the market and get the experience. And so you need to be trading on the simulator, trading every day, and then studying and then reading all that you can read. Reading our website, learn everything you can about our videos and our website. There's hundreds of videos, hundreds of articles, and they're all got solid information in them. Take the time to read them and study them, and then do your trading every day and study your work at the end of the day. That's how you get better. So, but hopefully you get the point with the important support and resistance. And I hope that's real clear for you, and I hope that helps you in your trading. And I'm going to add this to an article on the website for people, because I just can't tell you how important it is. So it's really important that you learn it and that you figure it out, that this is where everything happens. It's support and resistance. And what really happens is most inexperienced traders, when prices get up here to these highs, they're thinking this is when I get long, and all the smart traders are exiting up here. Smart traders are getting long on these pullbacks down here to the support areas, and there's support down here. There's support right there, all across there, and you can see that we've been testing both sides of that area. So that's what you got to find, and that's where you look for the entries. And if you want to trade a daily chart, you would be trading these points. If you want to trade a day trade, then you go to a smaller chart and you find these same points on the smaller chart. And there's an important area right across there. Let's drag this line up there, and I always tell you, put these lines on there because it makes it so much easier. But notice that there's an important support and resistance there. Look at that, how this is acting as resistance across here, and then we get above it a few times, and then finally it acts a little bit of support, but we just haven't really conquered that area yet. We're trying, but we're still working on it. And that was another reason to go short there at that point right there. And that doesn't even include the fact that the other reasons I showed that going short right there. So learn to spot this stuff, use it to your advantage. Realize if you don't do anything else, just realize that it's a key piece to learning how to read a price chart and to learning how to understand price action, but most importantly to learn how or to become a profitable trader. So I'm going to wrap it up. This is Matt with PriceActionTradingSystem.com. Hope you're enjoying your President's Day, and we'll be back tomorrow with our regular chart lessons. We'll see you next time.